G'day guys, welcome back to the Devon Too Good investing channel. Today in this video, we're going to be analyzing Tencent's business model, and we're going to be breaking down their business model into its different segments. There are 5 in total, and we're going to go through each of them one by one so you guys have a better understanding of how Tencent operates as a business. So before we get into that, I just want to deliver to you guys some key points about Tencent. So Tencent is one of the most diversified technology companies in the world. As of today, they have a market cap in USD of $450 billion. In full year 2021, they had a revenue of $87 billion, and they had a free cash flow for that year of $22 billion. And what's even more impressive is, despite being such a large company, their 5-year annual return on invested capital is about 25%. And in the next slide, we're going to be talking about how they managed to keep this return on invested capital so high. And they've also got what seems to be a fabulous CEO who was also the founder of Tencent, and his name is Pony Ma. And he has a large stake in the business himself, where he owns about 8.5% of Tencent. And it's really good when you see high insider ownership, as it means their sort of incentives are the same as the shareholders' incentives, where if the stock price goes up, well, they're going to get richer, and so are the shareholders. So that's what we want to see. When understanding Tencent's business model, I think it's really important to be able to understand their capital allocation strategy. So essentially, Tencent have a two-headed approach when it comes to capital allocation. So if we take, for example, last year they earned $22 billion in free cash flow, they can either invest that in one of two places. The first option is to reinvest that money into Tencent operated businesses, and the second option would be to reinvest that money into their investment portfolio. So Tencent is very different to a lot of the other big tech companies. For example, Facebook, Apple, and Google, they like to have a lot of cash on their balance sheet. However, Tencent doesn't like having this cash on their balance sheet, as it's an opportunity cost where they could have instead reinvested that money. So historically, Tencent have been very good at allocating their capital, and for their Tencent operated businesses, they've historically returned a 65% ROIC. So this is their first sort of priority. So let's say with that $22 billion, they would try to invest as much of that into their first option as possible, as they get better returns by doing so. However, they can only hire so many software engineers, they can only have so many ideas, and they can only grow so quickly. So with all the remaining capital out of their free cash flow, they'll take that and they'll invest it into their investment portfolio, where they do get a lower return on invested capital. However, 20% historically, I believe this might be lowballing it a bit, but it's an excellent return on invested capital nonetheless. So let's move on to the Tencent operated businesses. This is Tencent's main capital allocation focus, these 5 main business segments. And the first segment is their communication and social segment. And the majority of this segment is made up by WeChat. So WeChat is pretty much a multi-purpose super app that incorporates instant messaging, so think Facebook Messenger, social media, think Facebook and Instagram, digital payments, almost think of it as a blend between PayPal and Visa, live streaming, think of Twitch, short form videos, you could compare that to YouTube, a search engine, you could compare that to Google, and mini programs, which is very interesting. So mini programs are integrated into WeChat, and it pretty much helps integrate businesses and it allows them to communicate with the huge amount of users on WeChat. So that probably doesn't make a whole lot of sense, because quite honestly, we don't have this out here in the Western world. So in this aspect, I guess China is ahead of us when it comes to what they call mini programs. And that's probably something I can do a bit more research on moving forward. So WeChat itself, it has 1.2 billion monthly active users. That's what MAU stands for. And what's crazy is that's pretty much the whole of China's population. So this super app, is pretty much an ecosystem that is deeply ingrained within China. And by the looks of things, you have no choice but to use this app. It seems like there's no real competition here when it comes to WeChat. I guess some of their segments, for example, the digital payments, that's rivaled by Alipay. But in terms of the app in general, I feel like the users here are very much locked into the ecosystem due to its strong networking effects. And it seems like if there was another option, you probably wouldn't want to change to it anyway. And this is backed up by the average user spends over an hour on WeChat services every day, which is just incredible. And for comparison, the average Facebook user spends about 40 minutes per day. So we can see that WeChat is even more stickier and it's even more integral to the way of life in China. So the second business segment we have is digital content, and this can really be broken down into two types of digital content, one being Tencent Video, and this has 124 million subscribers. And Tencent Video, it's kind of like Netflix. However, there's some nuance to it. It's not exactly like Netflix because there's all the IP with their movies and all that, but I also have sort of creator content as well, similar to maybe YouTube. And then they also have Tencent Music, and this is actually growing quite fast. I just read through their annual report, and this has 76 million subscribers, and a Western comparison to this would be Spotify. So Tencent's third business segment is their domestic gaming business. So these are the China gaming businesses that they operate. And these businesses in particular have faced some heavy regulatory headwinds from the CCP. And pretty much what these regulatory headwinds are is the fact that school kids are no longer allowed to game on weeknights, and they're only allowed to game 1 hour per day on the weekend. So pretty much this is reduced playing time from kids in China. And I believe Tencent came out and said it reduced their playtime by about 88%. So this, as a result, has affected some of the growth, at least in the short term, with their domestic gaming business. And the management have came out and they said they expect these effects to ease in the second half of 2022. So once we hit sort of late in 2022, this segment of the business should continue to grow. However, that is quite a hit, I must say. But, it is what it is. At least Tencent are quite diversified, and they've got some IP here. I'm not too familiar with any of these games, given that they are Chinese games, but they do have IP such as Winter Olympics in Peacekeeper Elite, QQ Speed Mobile, and QQ Dancer Mobile. Those titles mean nothing to me. Let me know in the comments if you have any sort of background regarding these. Tencent also have a international gaming segment, where if you combine their international gaming segment and their domestic game segment, they're actually the largest gaming company in the world. But in terms of their international gaming segment, they have developed and they operate 5 out of the top 10 titles measured by daily active users, which is just incredible. Their international gaming segment is growing quite quickly. I believe in 2021 they grew sort of in the mid 20% range in terms of revenue, and they do have some crazy IP, which includes League of Legends. I know that game is played, people are just crazy about that game. And then they also own a 40% stake in Epic Games. So Tencent's fourth business segment is their fintech and business services. So I know I said there was five, but I've actually got six here, even though it's listed as five. So just for the sake of this video, just count domestic gaming and international gaming as one segment. But anyway, guys, fintech and business services. So they've got their CRM SaaS solution, which is QDIN. I think that's, or Chidian. Don't ask me how to say it, but just know it is a customer relation management software as a service solution. And think of, well, it's not as large as Salesforce, but that's what Salesforce is in the Western world, customer relations management. They also have their Tencent Cloud business, and currently they have 17% market share in China. So they are the second largest cloud provider in China behind Alibaba, and I believe Alibaba are well ahead in terms of market share here. They're in the sort of 30% range. However, the industry in China in terms of cloud is forecasted to grow at 37% per year for the next 5 years. So if we do see that growth with Tencent Cloud, it's going to be a substantial part of their business. And if it turns out anything like AWS or Microsoft Azure, it's going to be very bloody profitable as well. Then they also have their WeChat Pay, and the crazy thing about in China is that 85% of all payments are mobile, and of those payments, 90% are either processed by either WeChat or WeChat Pay or Alipay, which is owned by Ant Financial, and Alibaba owns 1/3 of Ant Financial. So then their fifth and final business segment is their online advertising business, and this has been affected by some regulatory headwinds. However, the management does expect these headwinds to ease late 2022, and this business should return to growth sort of around late 2022. The online advertising business is driven by three different things. The first one is WeChat, so that almost operates the same way that Facebook operates. Browser advertising, so that operates in a similar way to how Google might operate, as well as media advertising, which is pretty much throwing ads on their media businesses, for example, on their music business, on their Netflix sort of type business that they got, as well as on their short form video content, which you could almost compare to YouTube. So then Tencent also have a investment portfolio, and as of the end of 2021, this portfolio is worth about $138 billion US. And within this portfolio, you can see that they've got some recognizable brands here. I'm not sure what this one is over here that makes up 20%, but I know this here is C Limited, so they own 35% of C Limited. They own 18% of the Chinese e-commerce player JD.com. They also own 17% of Pinduoduo, which is also in e-commerce. 5% of Tesla. 40% of Epic Games, we already discussed that. They own a stake in WeBank. And we've got Snapchat here, and forgive me if I'm wrong. I'm not fully sure what this logo is here, but I've got a feeling it might be Zillow. But guys, this portfolio is their second sort of option when it comes to, let's say they can't invest that money effectively in those 5 other business segments. Well, then they get that leftover free cash flow and they're going to put it into a investment portfolio here. But I know Tencent, they own a lot more than this. They're actually very diversified in their investment portfolio, and a lot of the companies that they do own are private companies, so they're not listed on the stock market. But yeah, guys, this is my initial sort of analysis on Tencent's business model. I'm actually very interested in this business, and what makes me even more interested was when I did my last video on the net asset value calculation on Process. You could pretty much buy Tencent at a 50% discount by buying Process shares. So I think I've got more digging to do here, but this is sort of where I'm at with my understanding of Tencent as a business at the moment. I've clearly got more work to do, but as I do more work, I'll be posting what I learn here on YouTube. So guys, make sure you like this video if you enjoyed it. And if you did enjoy this video and you want to learn more about Tencent and other companies that I research in the future, please hit that subscribe button, and also have a good day and see you in the next video.